Well, hello, folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. Oh, the market crash. 3 days of absolute crap. And not a shock. The run-up we had about a week ago, I didn't trust it worth anything, so I wasn't buying too much. But with the market crashing now, I'm starting to pick up these stocks. And I told you about that last week that I would be looking at these if the prices got where I was comfortable. And that's happened for several of them. So we're going to talk about that today. And we're going to talk about the market, and we're going to talk about McDonald's just for a moment. All right, so the market was crashing like crazy last few days. I think we were down 800 points, then 600, then another 800 today. Here's your heat map. As you can see, I think there's, I don't know, one or two green ones in there. Everything else is just bright red. Tesla down 7%. Google down 4% right there. I mean, it's just been ridiculous. And why is that? Well, 8.6% inflation, which was higher than was expected. So it has not plateaued. It's not dropping. It's going higher. And of course, we've got the super high gas prices. Nothing's being done about it, unfortunately. And I don't see anything getting done about it in the next several months. I think we're just going to have to learn to live with it, and that is bad. That is going to keep inflation really high. And when you have high gas prices, you're going to absolutely irritate the American people like you cannot believe. And so be it. It is what it is. So we're going to struggle for a little while with this going on. And if you want to see it on a chart, here is your famous University of Michigan Consumer Sentiment Index. That's what the people on Wall Street really like to look at. Lowest in history, 50.2. It's never been this low in 50 years. Somehow we have managed to do something that's never been done. Go down to a low of 50. So pretty amazing. That just shows you how upset the American people are, and they're not handling it real well.
And then depression set in.
Yeah, it's definitely not good. We've got that going on. My Vols lost yesterday to the Notre Dame Fighting Irish, and that was in the baseball super regionals, and that just sucked. Notre Dame's a good team. They deserved to win, but ooh, it was painful. Very, very painful. I was not happy. I've got this going on and that going on.
This sucks more than anything that has ever sucked before.
Yep, definitely sucks. So we've got that going on. And now, to add insult to injury, we've got all the McDonald's in Russia have been taken over. And I actually have a video of the new owner of all those McDonald's, and here he is.
See, they're McDonald's. I'm McDowell's. Huh?
That's right. Russia changed the name. I think it's McDowell's in Russian is what they went with. Yeah, we're definitely in a tough situation. So let's talk about the 5 stocks. And I'm actually buying during this crash, and I'm dollar cost averaging. And this Meta really interests me quite a bit at these prices. I told you below 180, I really like Meta. It's getting down there to a true value stock. As you can see, it's sitting at 164. PE ratio of 12.43. I mean, that is just screaming by me. That's how I see it. You may not, but I do. And I bought it today. I didn't buy a ton of it, but I started buying it again. And at a PE ratio in the 12s, I like it a lot. It's a very profitable company, great balance sheet. I actually think the metaverse is going to be a home run for them. But, you know, even if you don't think it's going to be, they're still very profitable regardless. I think 1.9 billion people use them. So, you know, pretty popular, I would say. But it is a profitable company that it has real nice growth. They're only calling for 6 to 8%, I believe, this year because basically we're in a recession. But I'm very comfortable with Meta at these prices. The next one is NEO. I told you below 18, if it got down into the 15s especially, I'd be adding to my position. I did today. I bought some at around 16 bucks. I think it was 16.01 or 16 whatever, 03 or something. But anyway, I like this as a long-term play. I'm not buying this right now as a short-term play. I'm buying this as a 3 to 5 year play. I think NEO is going to be fine long-term. Now, granted, there are some special risks with a Chinese stock. That's one of the reasons why this stock is so low, given the fact they've sold a lot of vehicles last year, and their growth was looking great until the Rona showed up and the lockdowns. So you got the lockdowns to worry about. There's a possible delisting risk. Yeah, they're saying the right things in China about not getting delisted and the government and all of that, but that risk is there, so you might as well know it. But I'm comfortable adding to my position here. And here's Palantir stock. I told you if it dropped below 8 that I would be adding to my position. Last video I think I did this about a week ago. Did these 5 stocks, but under 8 I'd be adding. I did add today, and anything below 8 I'm pretty comfortable with. I started buying this at 12 and I bought it all the way down. I'm dollar cost averaging, and that's how I do it. That's my process, and I'm pretty comfortable with it. I like this stock long term. It is not GAAP profitable. It is cash flow positive, though. That's the one positive. The big negative they've got is stock-based compensation, and they've got some folks on the top that really like to take care of themselves, and they realize that's a problem, and they are working on it. It is going down, but if they can get that squared away and they continue at this 30% growth rate, which they're expect to do through 2025, this stock should be great. It's an information software as a service company, and they take the information of a company and show them the value of it and how to improve their business, which I think is great. They also sell to governments. I love this stock long term, but you may not. It's risky because it's a high growth stock and it's not profitable, but I like it a lot.
I like it a lot.
The next stock is MP Materials. This is a stock that I really like. I told you at 35 or below, I'm going to probably add to this position. I did that today. It got down in the 34s, so I did add, and I was pretty comfortable doing that. This is a stock that is becoming very profitable. When you look at its numbers, the revenue was up 177% year over year. Net income up 430%. Net profit margin 91% up. Operating income up 429%. Look at the margin on this. Out of $166 million in revenue, the net income was $85 million. That's outstanding. I mean, that's 50% net profit margin in a mine. And understand, this is the only mine in North America that actually mines the rare earth elements that we need for magnets, and it's very important to the country. And they're actually having a phase 2 and a phase 3 where they're going to start processing that material themselves, which will be more profit for the company. So I really like this company. Great balance sheet, profitable, growing like crazy, a necessary company for this country, and a huge moat. To me, under 35 bucks, I couldn't be more comfortable. The PE ratio on it is a little bit high at 32, but understand, I think in less than a year, this is going to be a huge value stock if this price stayed the same, which I don't think it will, not at these growth rates. The last stock on this list is Ilus. It is a penny stock, and it's the mighty Ilus. This one is a profitable penny stock, which is pretty darn rare. You don't see that a whole lot. And on top of that, they are growing like a weed, so that's really good. They are in the OTC market, so take that into consideration. There are special risks with penny stocks.
Danger, Will Robinson. Danger. No, Will Robinson. Danger.
But this is one I feel pretty comfortable with. It's sitting on support at 10 cents. I'll show you that. Yeah, here you can see it's been sitting down between 10 and 11. And even with a total market crash, it's still sitting on that support. So, you know, around 10 cents, I'm pretty comfortable with this. I have added to my position. I actually didn't buy today because I was buying the other stocks. But, you know, around 10 cents, I'm pretty comfortable with Ilus. And they've got a lot going on. This is a mergers and acquisitions company, and they've got about 7 or 8 companies under their umbrella. And they're also got one that's getting ready to possibly uplist through a spinoff. And it looks like they're going to be adding a $100 million revenue type company into that umbrella. So I'm pretty comfortable with Ilus long term at these prices. But, you know, it's a penny stock, so keep that in mind. All right, folks, and I know this was a tough day today, but this is the time that I buy. When things get real ugly, that's when I like to add to my positions. But, you know, it's your money. You do as you please. But these are good buying opportunities in my mind. And it may drop lower. Don't think this could go lower. Absolutely could. And if it does, I'll just buy more of these stocks. And these are 5 that I'm buying. I got a few more that I'm buying as well. But if you like this content, be sure to hit that like button. Lets me know to continue to cover these companies. And like I said, I haven't done a lot of these multi-companies videos. If you like it, let me know in the comments section. I would appreciate it. And hit that like button. That lets me know that you like it. If you don't, then don't do that. Anyway, I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.